Ladies and gentlemen, welcome back to Vietnam Stock Market Opportunities. It's an honor to be with you today. And if you want to open a legal trading account, please contact us with the email Vietnamstockmarket.entry@gmail.com. Telegram Vietnamstockmarket.entry with the phone number is 8491-432-6556. Or you can also scan the two QR codes on the screen so that we can support you. And the other way to contact with us is please follow and subscribe to the channel name Areca Capital Channel. The owner of this YouTube channel is Areca Nguyen. She's a personal financial advisor. You can contact her with the email home.nguyen@vcnc.com.vn with the phone number is 8491-432-6556. And we always welcome you to our office on the 11th floor, 109 Trần Đạo Street, Hoàng Kiếm District, Hà Nội, Vietnam. And today we're going to update to you about Vietnam Strategy 2023. Let's continue with power and water, growth in renewable energy. Vietnam's electricity consumption to increase 8% to 9% PA in 2023 to 2026 forwards. Vietnam's Vietnam's energy elasticity was averaged at 1.9 in 2007 to 2019. Energy elasticity is defined as the percentage change in energy consumption to achieve a 1% change in national GDP, or electricity growth divided by GDP growth. In 2017 to 2019, Vietnam's energy elasticity improved to 1.4 from 2 on average in 2007 to 2016, as the country started to move away from labor, energy-intensive manufacturing to higher value-added activities. However, Vietnam's energy elasticity was abnormal at 1.1 in 2020 and 1.7 in 2021, which was mainly driven by the COVID-19 pandemic. In 2022, Vietnam's energy consumption rebounded as a result of the economy recovering, which led to one energy elasticity. We assume the country's energy elasticity will rise to 1.3 in 2023, which is equivalent to the pre-COVID level. We believe our energy elasticity assumption is renewable to use in conjunction with our in-house GDP forecast to derive our forecast for Vietnam's electricity consumption growth. Vietnam's electricity consumption to rise 8% to 9% PA in 2023 to 2026 forwards. COVID-19 and the Russia-Ukraine conflict remain two sources of uncertainty in macro forecasting. However, our base case scenario continues to be that the global economy, along with Vietnam, will continue to recover progressively from the disruptions of COVID-19 that occurred in 2021. As such, we assume that Vietnam's GDP growth rates will return to pre-COVID-19 level of around 6%, 7% in 2023 forwards to 2026 forwards. Using our assumption for Vietnam's energy elasticity of 1.3, we estimate that Vietnam is likely to see electricity consumption growth of 8% to 9% PA in 2023 to 2026. Our electricity consumption growth forecast is more conservative compared to the PDP-8 draft. According to the PDP-8 draft, November 2022, the Ministry of Industry and Trade forecast that Vietnam's total electricity consumption base case scenario will grow at a CAGR of 9.8% from 217 billion kilowatt hour in 2020 to 551 billion kilowatt hour in 2030, which is nearly 20% higher than our forecast of 438 billion kilowatt hour. Level lines, cost of electricity, cost of power production, and power IRR in Vietnam. The level lines cost of electricity is a measure of the average net present cost of electricity generation for a generator over its lifetime. The levelized cost of electricity can be calculated by first taking the net present value of the total cost of building or operating the power generating assets. This number is then divided by the total electricity generation over its lifetime. According to Vietnam Energy Magazine, as of Q4 2022, the levelized cost of electricity of coal-fired plants 600 megawatt capacity using ultra supercritical technology imported coals ranges from 6.1 to 8.1 US cents per kilowatt hour, with a coal price of around 60 US dollar to 100 US dollar per tons. For gas thermal power plants, combines cycle gas turbines with 750 megawatt capacity. The LCOE ranges from 7.7 to 9.6 US cent per kilowatt hour, with the gas LNG price of around 7.5 US dollar to 10 US dollar per MMBTU. Meanwhile, the costs of production for solar and wind power have climbed over the last decade. Industry players anticipates the cost of production for solar power to be 5.5 US cents per kilowatt hour, and the cost of production for wind power to be equivalent to the cost for coal-fired plants by 2030. Hydropower has the lowest production cost. Under our coverage, the contracted prices of traditional power plants range from 4.8 to 9 US cents per kilowatt hour, which ensures that plants achieve IRRs 10% to 12%. Previous FIT policies for renewable energy ensure IRRs of 12% to 20%. We expect the new pricing mechanism will continue to support renewable power plants to have IRRs of 12%. Vietnam will need to attract private and foreign capital to fulfill its capacity expansion. According to the PDP 8 grants, Vietnam plans to invest 123 billion US dollar in its power sector in 2021 to 2030. This amount translates to an annual capital requirement of 12.3 billion US dollar, equivalent to 4%, 5% of Vietnam's GDP. In particularly, 107.6 billion US dollar is planned for power generation and 15.4 billion US dollar planned for power transmission capacity over this time period. In the short term, Vietnam's renewable energy plants will face more difficulties in finding financing sources from both bank loans and bond issuance. In 2019 to 2020, the banking industry experienced a surge in providing loans for green energy projects, which was driven by the development of renewable power plants in Vietnam due to the government's future energy direction and supported by FIT policies for solar and wind power projects introduced in 2007 and 2018 respectively. A high debt capex ratio with a similarity between banks' loan programs. Some commercial banks even allow their customers to apply their energy plans as collateral. However, this trend faced difficulties in 2021 to 2022. In 2021, every bank tried to sell two loans in Vietnam and US dollar for the Bắc Giang hydropower project of Someco 1. In April 2022, Vietnambank announced it would sell its 114 million Vietnam dong loan in the waste-to-energy plant in Phú Quốc. Per BIDV, September 2022 marks the ninth time it announced an auction of assets in Tân Thương hydropower. In fact, these examples are only a small picture of many renewable energy plants that were punctually complete to meet the deadlines of FIT policies expiring in December 2020 for solar power and October 2021 for wind power, which forced them to wait for new pricing policies or have to liquidate assets to ensure bank loan payments. There was similar pressure for corporate bonds on the delay of new pricing policies as the energy sector was very promising in 2020 with high capex characteristics and without complicated procedures as bank loans. Corporate bonds were one of the favorite capital channels for renewable energy. The energy sector accounted for 3%, 28 billion US dollar of Vietnam's bond balance as of end 2021. As of the 31st December 2021, Vietnam's corporate bond markets had a value of 53 billion US dollar, nearly 16% of GDP. According to the Vietnam Bond Markets Association, the issue bond value for energy sector was 1.6 billion Vietnam dong in 2020, which then decreased to 1.2 billion Vietnam dong in 2021. Notably, the figure for 9 months 2022 was only 123 million Vietnam dong. It is obvious that corporate bond offers for green energy projects are also becoming tighter as new pricing policies still have not been determined and are strengthening the feasibility of cash flows to be used for interest and principal payments, which makes corporate bonds for renewable energy less attractive. Moreover, corporate bonds have been issued at shorter maturities in recent years. Per the VBMA, the average maturity of corporate bonds issued in 2020 for the energy sector was approximately 8 years, whereas this figure for 2021 was 6.29 years. This means renewable energy plants are having less time to operate, in turn putting more pressure on their bond repayment responsibility. Chess Energy Transition Partnership created turning point for Vietnam energy transition prospects. The Ministry of Natural Resources and Environment announced that Vietnamese government and the international partners group, which includes the EU, UK, US, Japan, Germany, France, Italy, Canada, Denmark, and Norway agreed on a JETP on December the 14th, 2022. The program will mobilize by initial 15.5 billion US dollar of public and private financing over the next 3 to 5 years to support Vietnam's transition to green energy, which we estimate will guarantees 25% of Vietnam's power capacity requirements over the next 5 years. In addition, the partnership will support Vietnam's in bringing forward the country's projected peaking date, the date Vietnam has committed to reach its carbon emissions peak, followed by a reduction of emissions for all greenhouse gas emissions in Vietnam through 2030 instead of 2035 as Vietnam committed in COP26, and reducing peak annual power sector emissions by up to 30% by 2030 to 170 million tons from 239 million tons in 2035, sorry. As planned in PDP 8, the partnership will also help to reduce Vietnam's coal capacity to 30 gigawatt from the current planned figure of 37 gigawatt and accelerate the adoption of renewable energy in order for us account for at least 47% of Vietnam's electricity generation by 2030 compared to the current planned rate of 30%. The government is developing a scheme that allows private investors to participate in transmission rates upgrade projects. The PDP-8 draft highlights that the policy requiring the state to be the sole owner and investor of the electricity transmission grid is outdated and thus requires revision. As such, the PDP-8 draft proposes the below changes to the grid investment process. For new transmission line projects, linking power generation projects to the national grid, the total investment costs are shared with all power generation projects based on the economic benefits of the new grid line to each specific project. For upgrade projects for transmission lines linking electricity demand sources, industrial parks to the national grid, all beneficiaries of the new transmission capacity will share the most of the investments. For new grid lines that link large power projects to the national grid in order to have the new power generation and transmission capacity coming online at the same time, the government can consider allowing private investors of the power capacity to invest, own, and operate the related transmission lines. The cost of investment will be built into the power purchase agreement price. Congression issues have been nearly solved as one. Private investor Jungnam Group brought 500 kV of new transmission lines into operation in Q4 2020, while the third high voltage 500 kilovolt national transmission lines, which have been components Vũng Áng, Quang Trạch, Dốc Sỏi, and Dốc Sỏi Q2 came online in Q3 2022. The Kiến Bình Phú Quốc 220 kilovolt voltage transmission line was completed in Q4 2022. Renewable energy capacity to expand further, especially for wind power. Vietnam's renewable energy industry is fragmented, with the majority of companies coming from the private sector. The two biggest domestic players are Xuân Thiên and Trung Nam Group. One notable foreign investor is Green Power from Thailand. All companies under our coverage targets massive new renewable energy capacity via self-development, M&A, and cooperation with partners. For example, REE, HDG, and GEG targets an ambitious 600 to 1,300 megawatt over the next 5 years, compared to this company's current capacities of few hundreds megawatt. Most new capacity is onshore, nearshore, and offshore wind power. Only REE has the average of rooftop solar. Under our coverage, REE, HDG, and PC1 have built to operate strategies, while GEG has a build to sell strategy. For wind farms, their typical gross profit margins range from 50% to 70%, with an expected utilization rate of 30 to 35%. The higher the utilization, the wider the profit margins for wind farms due to high fixed costs. Under our coverage, REE stands out with its nearshore wind plant capex of 39 billion Vietnam dong to 49 billion Vietnam dong per megawatt, 10% lower than its peers, and lower financing rates. REE is also the only company under our coverage that has the advantage of having rooftop solar and offshore wind power. Additionally, REE has engaged in talks with the Prime Minister and a foreign partner to develop a giant project, 2,000 to 3,000 megawatt, and believes this project can have a wind speed of 10 meters per second, compared to 6 to 7 meters per second for onshore and nearshore wind projects, and a turbine capacity of 16 megawatts, 4 times compared to nearshore wind projects. Therefore, REE expects a tariff of 11 US cents per kilowatt hour compared to the LNG power tariffs of 9 to 10 US cents per kilowatt hour. CapEx and financing rate comparison for wind power development across our coverage. We expect a new pricing mechanism for renewable energy to be approved in 2023. On November 20, 2022, EVN proposed new prices for transitional renewable power plants, which are 50% to 20% lower compared to the previous FITs. We note that renewable power plants must enter negotiation with EVN to obtain these new tariffs. Transitional renewable projects include 4,000 megawatt of wind power capacity that finish construction but missed the October 2021 deadline for the favorable tariff. In addition to new wind power projects that have already secured investment approval and are under construction, we expect this proposal to be approved in 2023. We also expect the same mechanism for completely new renewable power projects. Vietnam's renewable energy sector, in comparison with other Asian countries, governments across Asian countries are accelerating their respective transition to renewable energy based on the targets of Southeast Asian nations. Vietnam is expected to lead the region in terms of installed renewable energy capacity thanks to the country's long coastline and stable electricity consumption growth. In the PDP 8 draft November 2022 version, the government targets to nearly triple the stable capacity of renewable energy in 2020 to 2030 to 50,000 megawatt in 2030. Meanwhile, India is one of the countries in Asia with the largest installed renewable energy capabilities, uh, capacities. The Indian government aims to triple the country's installed renewable energy capacity to 430,000 megawatt in 2020 to 2030. Taiwan is another notable country developing renewable energy and has guidance similar to Vietnam. Investment costs of wind turbines and solar panels will continue to trend lower through 2050. According to the International Renewable Energy Agency, improvements in technology manufacturing processes, renewable manufacturing facilities, and competitive supply chains are the main drivers that will put downward pressure on turbine and solar panel prices moving forward. For solar panels, investment costs are expected to decrease to 0.3 million US dollar, 0.8 million US dollar per megawatt in 2030 and 0.2 million US dollar to 0.5 million US dollar per megawatt by 2050 compares to an average of 0.9 million US dollar in 2021. The International Renewable Energy Agency's forecast also state that the total installation cost of onshore wind projects will continue to decline by 15% to 30% to 0.8 million US dollar to 1.4 million US dollar per megawatt by 2030 and 0.7 million US dollar to 1 million US dollar per megawatt by 2050 compares to the global weighted average of 1.3 million US dollar per megawatt in 2021. Bloomberg Energy Finance also forecast the median level lines cost of electricity of onshore wind farms to decline 30% from 113 US dollar per megawatt hour in 2022 to 76 US dollar per megawatt hour in 2026. Similarly, the median LCOE of onshore wind farms is projected to decrease 20% from 47 US dollar per megawatt hour in 2022 to 37 US dollar per megawatt hour in 2026. In our view, lower investment cost will have to maintain the profitability of new projects, even with lower FITs for solar and wind power projects in the future. And that brings me to the end of my presentation today about power and water. So if you want to open a legal trading account, don't hesitate to contact with us with the information on the screen so that we can assist you. Thank you for listening and hope you guys have a nice day. See you next time.